Broadcast. Welcome to the Zaner MarketCast, your one and only spot to keep up with all of the agricultural market news. My name is Joe Nikruto, and I'm here with
Dan Hussey.
Here in the room with Dan Hussey. How about that? What's going on, Dan?
Broke the foot, had the surgery, kids started school. It's been a while since we got to do one of these in person.
Big stuff to cover. As usual, we'll also be digging deep, not only into your foot and my mechanical life, but we'll be digging deep into the grain and livestock markets, especially today, corn and beans after the WASDE report. We're going to do our best to bring you up to speed on what took place here today. I'm sure everybody saw that. As always, keep in mind with everything we talk about today, futures trading does involve risk of loss, and you should make sure that this stuff fits in with your specific risk profile and tolerance. Today, Dan, before we get started, we want to talk about Karen Braun's commentary, Ted Seifried's daily market commentary. Two great ways to get up to speed every day on the markets and the agricultural industry as a whole. You can sign up for both of those things in the description below. Quick and easy to sign up, and you can get access to timely commentary on grain and oilseed price action, concise charts and visuals to help you better understand the markets, and deep dives into agricultural topics like planting intentions, weather impacts, policy developments, and more. Again, totally free, and you can sign up now by clicking in the description. Dan, how is the foot?
Good. I'm not quite running yet, right? But for having broken had a Jones fracture, broke my N5, a surgery to put a pin in, remarkably quick turnaround time. I can't believe I'm already on my feet walking around.
Seems like it's only been a couple weeks.
I was a month out from surgery, and I've already got a gym shoe on. We're a few weeks out from that, and I'm getting ready to start, galloping a little bit, which is crazy, right? They told me 12 weeks if I didn't have the surgery, and here I was like 4.5 weeks out of surgery, already in a regular shoe. My mind was blown.
That's incredible.
Yeah.
That is just incredible. Well, that's great news on the recovery.
Thank you.
Today, swinging back around to markets, we showed up today to eat some Manny's Deli and watch and see what was happening.
To show up for a little government news drop.
Yep. Just a little thing WASDE today. Yep. And so I was unsure what we were looking for as we came in to the WASDE. I was like, okay, what's the surprise going to be? There's not really anything they can say here, in my opinion. What's gonna catch our eye? But there were a couple things.
Oh yeah, I think there was a head turner there, and I will just rip the Band-Aid off and say, acreage here was a big head turner, and we've even seen some conversations, and check them out on Twitter. Follow Karen there. She's having some conversations of trying to figure out what went on here, right? Why are there some big shifts in these acreage numbers from the June report? Why did we get arguably a surprise additional acreage here this late in the year? And that comes in the back of, and on a report when I think a lot of us were really just looking to see if we're going to see some yield reductions based off of a lot of the issues we've seen across the country. So at first, I would say, just on a broad stroke, I feel like that initial negative reaction from the news was whoa, what's that acreage number doing? That pops production and, carryouts a little bit higher than we thought. And then when people kind of shrugged it off by the end of the day, what happened with price, right? And we'll get into that here throughout the rest of the podcast.
So how about if we just get right into it? Let's talk about December corn, which is where one of the bigger reactions. December corn opened the week 417, high was 430 and a quarter, low 415. Last trade I saw was around 429. That's up 11. I was caught by surprise. I saw this morning's count on fund positioning. They had the funds estimated to be short still 90,000 contracts. And I thought, wow, that seems kind of big. I wonder if they'll be short 90,000 contracts after today's price action. But the real deal there was...
Yeah, I would say remember that 90,000 is from last Tuesday, right? So this is from...
No, this is from an estimated count as of today.
Oh, as of today. Okay, I'm sorry. So, I was mistaken. I thought that was
from Tuesday, that would have made sense, but not from
Right,
Tuesday.
That's why I was like, maybe if we look, remembering when it was taken from. But okay, staggering number of shorts still at this price, right? You're 45 cents off the lows here?
To the degree that if they decide to continue to cover those short 90,000 contracts, we could get some. Now, the surprise here today was what? Acreage,
which propped that production number up higher, right? Corn yields coming in at 186.70.
2 point something lower than the trade estimates?
Yes.
Full 2 bushels, right?
Oh, full 2. Yes, full. The corn yield was, yeah. Well, I've got here, no, I've got it 5.5 over trade estimates.
Trade estimate coming in.
We came in 2 under last month. Yield was 188.8 from last month. We came in 186.70.
Under.
Yeah, 2 under.
2 bushels under.
Exactly.
Okay,
right. I'm sorry. We were talking, I was looking against trade averages. Joe was talking against month over month there. Okay. So that rectifies that. Corn harvested acres though, and that's where we saw the big jump, right? We weren't expecting a 2 million acreage addition or almost 2 million acreage addition.
Incredible.
Month over month and by the way, an 8 million acreage jump over last year. So that is just a massive shift in corn acreage that nobody saw really coming at this point, right? So we're all focused on yield. We get the yield reduction, or one that is actually only a half a bushel off from our trade guesses, not as low as the 186.20 that the trade was expecting, but okay, 186.70 for yields with a 90.04 for million acres or harvested acres brought production up to 16.8 billion bushels. So that was 300 million bushels above trade estimates, as well as 100 million above the August report. And, we all know 2 billion bushels above last year. And that, arguably then makes a big jump into ending stocks because we don't have major changes. Well, we did see some increases in exports. But it wasn't enough, right? Because that increase in production from that acreage jump, adding 2 million acres to this number brought that ending stocks number up as well. So corn coming in at 1.32 billion bushel, higher than the 1.31 expectation from the trade and the 1.30 from August.
Now, today's price action says that maybe the market isn't necessarily on board with this acreage number, right?
Right. Somewhere so what was the thing into today? We just talked about a bunch of data points that we were expecting and one we were not. And we had a reaction in the market, like Joe's pointing out, that I think correlates directly with that.
Sure. So we were up on the day. What was that? Like a full 10 points, 10 and a quarter. Over the 100-day moving average, closed over previous high. For December corn, there was a swing high there. I think we got out over that, right? We're looking to get into.
You have effectively that V-shaped recovery from that late June, early August high. For sure. That you got back over that old December in August of last year contract lows, like you pointed out, back out over that 100-day moving average. Got a nice channel going higher above a downward sloping trend line that we've been below, since April of this year. I mean, great technical looking developing chart, right? Now you're starting to get into the overbought territory on RSI. The fund position is not anywhere near neutral to long, so we know that there's plenty still to come out there.
A lot of bullets.
But the question remains is, can we get now back into that old range, right? That's the question for corn. When you look at this chart, and we'll have it on the screen for you, there's a big blue box on it, which represents the old low end of the trading range that we broke below here in June of this year. If we get back above those levels, we're into, back into an old range, and corn could open up to 450 to 480, right, in a hurry. And that's something we're hopeful for, but is the narrative there to carry through is the real question here. Or is this rally going to fizzle out based off of, a little bit lower production number than what we thought coming into harvest, but once harvest combines roll and that supplies hit the market, it's still 16 billion bushels of production. Take off a million or two acreage, and that shrinks down a bit, but it's still a big number, and it's still a lot of crop that we're going to have to chew through.
So we would be remiss if we didn't mention this gap over here to the left from June, from back in June. There's a bit of a gap. 429 on the bottom. I think it's 432 on the top.
We're right there.
Shout out to Bill for pointing that out this morning. That gap should be a very solid signpost, right? If we can get out and close over that gap and start attacking the high from the bar on the top of that gap for whatever that's going to be, 435, 437.
There's no coincidence all of these levels are here at the same place, right? This confluence of technical reasons to consider we're at a line in the sand to really pay attention to.
You and I have been in this exact spot before where we're jumping up and down, me specifically jumping up and down about technical breakout. Volume is in our corner the same way it is here today.
Yeah, big volume update.
Funds are doing what they're doing. Everything points to higher corn prices. And 8 days later, we're 60 cents lower.
And that's where I was saying it with a cautionary tale right earlier, because, hey, we are still heading into the seasonally bearish time of the year for a decent crop, right? No argument that there's reasons to think it's not as good as we thought. That, I think, is a solid, there's a solid case for that right now. But, right, you also have to remember that until our trade partners really pick up the export game, until, we can... until it's sold and until the crop is harvested and we know for a fact those problems existed, they still could not, right? And it's a big crop.
Can you imagine a run for the lows between now and late October, mid-November?
I think it could come a little bit later, because I do think the market is in a period of price discovery higher from what we talked about technically, but I also think it's in a period of repricing the oversupply situation that we may have been devaluing this crop for some time. I think we're pricing that back in. So long story short, I think that there is, there's room to run to the upside, but I do think for those that are particularly, a lot of the guys and people we talk to, and generally speaking, we've heard are a little undersold right now, they're going to use this opportunity to sell. And I think that's a wise decision, for cash management, cash management decision, right?
And then we stand by and wait for the
time where we see 60-cent sell-off. Right. That's when we now come back in and we'll re-own it and smile 6 ways till Sunday.
For sure. And our colleagues, a lot of talk. We were at a meeting a handful of days ago, and that's kind of the groundwork they're laying is let's sort of take advantage here of this rally and then look for a place to re-own down the road. I'd be a little nervous if you hadn't re-owned any of it. I'd maybe have some just in case. And here's me not learning my lesson. Just in case this thing does keep running on. You may be watching that train move down the tracks and not be on it at all. It would be a shame not to re-own any of it if it starts to run, but corn should give us a chance one way or the other.
But do reach out and give us a call if you want to talk a little bit more about where some of those pricing levels could be, or what we could talk, or how we could structure a sales plan for you over the next several months.
Nove beans opened the week at 10.27. High was 10.49. Low 10.22 3/4. Last trade I saw was 10.45 1/4. That was up 18 1/4 on the week. Funds now long 9,000 contracts, and here I was caught flat-footed with that number too. I thought it would be bigger, but funds are on the long side of the ledger coming into today. I would imagine they're a little longer after today's price action, but here again, a chart that, or maybe we talk about the numbers first. We had in terms of yield, I'm good with the chart, but we're crop production and ending stocks. I mean,
yeah, right. Like this was like a statistical push in my humble opinion.
I was going to say push. That's a push.
Yeah, this is par for the course. 53.5. Okay, 0.2 bushel above the trade average. I think everything on the soybean balance sheet side here, with the exception of, I shouldn't say everything on the balance sheet. I should say everything on the production side of the balance sheet here was more or less kicked down the road. Some slight adjustments that seem like just pencil pushing that, hey, beans are made in August. It's September 12th. There's absolutely no reason to be speculating here when very soon we're going to have a little bit, more of a reason to believe rather than a speculative, right, report. So that, however, didn't translate the rest of the report, right? We saw some other reductions throughout it, but South America, though, before we get into that chart, was an absolute push on the bean side. But just to give you everyone a refresher here, we came in 50.9 on Argentinian production, 169 on Brazilian beans, because we didn't do the corn either. 48.5 on the beans there for Argentina, and 175 for Brazil in terms of for net production. World ending stocks for soybeans came in at 123.9. That was softer. And I've got to do my homework. I'm caught off guard right now. I don't remember off the top of my head why we saw 1 million metric ton reduction there compared to last month. But I would imagine that came off of feed and residuals and probably usage. That hey, if you're not buying our soybeans,
Crush numbers.
or crush numbers, right? If you're not buying our beans, they've got to be getting used somewhere, right? So ending stocks have to be going down.
For sure. But this chart, though, what a move out of a rather congested technical area, right? You've got 3 moving averages there, kind of holding this thing up as we had retraced from 1060 back down into the 1020s, right? And so,
yeah, and about halfway of the trading range, we've been going back to January, which, you don't typically see. You see a market that you can see it more clearly here, right? It's
Sure.
just we've been consolidating sideways for so long on this chart. Up above that 18-day moving average, though, that's a fact figure we haven't been above since the start of September, which is great to see. Yep. We're going to be putting pressure back on the high end of that range, in my opinion, but you still have this downward sloping trend line around 1060 and the 1080 kind of resistance zone that we've been below, since for the last year. Actually, we have not been above that level since September of last year. So interesting. Maybe September's that turnaround month. 1 year to the day, pretty much. We are coming back up on some levels. I mean, we got a ways to go, right? We were up in the $11 handle back then, but nevertheless, market constructive inside of a larger range, but we'll see if it can't continue higher.
one day's leap off of that congestion area does not a bull market make, but that is constructive price.
It's constructive
considering what we saw today.
And I do want to point out we have come off of an oversold condition, right, on that daily RSI with positive, a good volume push here. And as Joe said, the funds shifting to bullish. Okay, maybe there's a dynamic shift here.
We'll take it.
That'll take beans higher. There's a narrative there to talk about.
So the market nobody really wants to talk about. Dees wheat opened the week 519, high 5.25, low 512. Last trade was 522.25. That's up 3. Funds are short 77,000 contracts of Chicago wheat. Market seems to think that fund short covering rally is not only in progress but should continue. I'm not sure that there's a tremendous amount of fundamental. Market does not seem to have a tremendous amount of enthusiasm for finding a new higher price level. 525. What do we say here? What was the last traded price here? 527, 522.25. That's not great price action. Seems like we have been here where it hangs out and then falls down to a new low, hangs out, falls down to a new low. Sooner or later, it's got to stop going down.
Right. And you eventually, the game has basically been then a short covering rally into the 200-day moving average where we get rejected and, that price action continues. So I guess from the bull standpoint, like the worst thing you're looking for is just for that short covering rally back to the 200-day moving average, because that's happened 4 times here. Well, this would be the 4th since August of last year, sure enough. So, that type of thing happens, but you got to get out over that 18-day moving average first, right? You got to get out over that downward sloping trend line that's been across the highs and that steep channel that we're still in. Once those things start to turn, okay, start to see the funds go, the volume covers. Not to say that it can't happen from here, but don't pick a bottom, folks. Wait for confirmation.
Our friend Mark Soderberg from ADM put some data on this. Exports increased 25 million, highest in 5 years for wheat. Ending stocks down 25 million bushels to 844, 20 million below expectations. Higher exports. Global stocks up 4 million metric tons. Global production rose. Global demand up 5 million metric tons. All of this data to me sounds like, yet again, push. Production increase in Australia, Canada, Russia, and Ukraine. Not a push. Certainly bearish. I don't know. I'm not sure what to make of this wheat. We'll see how that plays out, I guess. Where does that leave us? Do we talk about cattle?
I think you got to mention them here. We've got some movement this week that might change a thing or two. I mean, this is the first weekly close we have below the 18-day moving average.
Feeders?
For both feeders and fats.
Open the week at 358.50 in October. Feeders high 361.30. Low trade 344.90. Last trade 345.80. Down a whopping 12.10 on the week. When was the last time you said that? Feeder cattle availing itself of the opportunity to see what is down underneath. I don't know technically what to make of that. Certainly, you could say you're due. It's September.
Yeah, this is the
time.
first close we've had below that 18-day moving average since April. So that's a huge, I think, I shouldn't say that actually. First weekly close we've had since then, but we've had two other closes, once in May and once in June. But they're quickly like rebounded. We're not, it's not a chart that's pointing down. It's one that's kind of hovering below it in those instances. We seem to be hunting out now down towards the next big technical and supportive areas. 50 and 50-day moving average down are at the 337, 340 area. That's also where there's a bit of a congestion zone in August, little resistance and support there. That's probably your next supportive area, or where the chart is hunting out for support at this time. Then below there, it's like 320, $3, 280. It starts to ratchet down some serious handleage because we've just ran so far for so long, for so fast. So there's a lot of room to come back. Markets take the stairs up, elevator down, all those cliches, insert them here to be protective. We saw one limit down day already, and now follow through after that 2-day dead cat bounce. I'm actually surprised we haven't seen more limit down given what markets can do. But I also think that, hey, there's a real reason why these markets got bid up to begin with, right? There's shortage issues. Until the border gets opened, we're not magically making cows and cattle anytime soon, right? So there's a factor there. Yeah, I mean, we're oversold on the daily RSI, but today was a big volume up day, down day, but the volume was up, and today you follow through and close at the weekly lows and lower highs continuing. I mean, yeah, it feels like a downtrend starting to try to take over.
So you look at the fats for October, open the week at 235.87.5. High was 236.87.5. Low trade of the week, 228.80. Last trade, 229.97, down 6 full points in October fat cattle. Same chart, I would guess.
Yeah, very similar, right? I think it obviously, made a little less progress to the upside than the feeders did over the courses of the last 6 months. But didn't close into new lows on the week, but certainly made new lows today. And a bearish close for all intents and purposes, still below that 18-day moving average, which is up around 235. The 225 area is where that similar, 340 level that I was talking about in the feeders. 225 is that level in the fats. That's what the 55-day moving average is. And then below there, 220-ish, 210. I mean, you start to ratchet down, but we'll cover those levels as we start to go. But we can at least identify, in my opinion, 240 in the feeders and 225 in the live cattle are some interesting confluence of technicals I would pay attention to.
So, and traders could carefully monitor what these feeder cattle continue to trade for out in the country.
Yes,
right?
The cash prices are king
cash
here,
price,
right?
If the cash doesn't turn.
Right, and I think the softer cash trade we've seen of late is a big reason we're starting to see the softer tone here too. There's also dynamic shifts in credit markets going on with an FOMC statement coming up where there could be some rate cuts. I'm not saying that is bearish cattle, but I think that the rate cut has possibly been priced into a lot of markets, which means prices might be a little bit higher than they should be after that news event occurs, right? So if cattle was a proxy for that, there could be some downside if there's volatility in broader markets after an FOMC decision. But arguably, this downturn was an overbought market, needed to cool off a bit. And if cash prices hold firm, right, at a time that's seasonally bearish, if cash prices hold firm, we'll see how markets want to trend into December.
One thing I would say is that if you don't continue to see weaker box beef prices, if you don't continue to see weaker cash trade, it's going to be very difficult for these futures to mount any further downside campaign.
Yes.
If the product and the cash market does not cooperate. And I believe that there's some suspicion that packers are trying to begin to fill in for what they're going to need for the holiday. And we'll see. Normally, like we said, September, bearish time of the year, kind of quiet time as you go from your grilling season to your holiday needs in terms of celebrations. And so could be that in years past, cattle market takes a breather while they wait for the packer to begin to build the pipeline of those supplies. That might be happening earlier this year. So we'll watch this break to see, because it was said that not yesterday, but the day before, there was commercial interest on the break. And that's when we stopped going down, when commercial interest was spotted.
And that's where the rubber hits the road.
Right. And so now if you've got commercials buying it down here, your speculators, your algos are going to be loath to press if it's the commercial that they're selling it to. And so today, we'll take a look at today's cash trade. We'll monitor cash trade long about midweek box beef trade. And that should give us a pretty good signal as to whether this thing has legs to the downside or not, is what I would say.
Yeah. And that's the $1 million question at this point. But I think it would behoove any producer, not to take advantage of prices when they're still up at some of the highest prices you've ever seen. There's ways of doing that safely and hedging here where you're not having to continually meet the margin man, so to speak.
For sure.
So
a lot of that was going on.
Right. There's better ways to do it than just sell the futures, sell the board. Give Joe and I a call. We can walk you through what some of that looks like. Got a question of the week from producer Carter.
Question of the week. Question of the week. Here is the question of the week.
We need like a song.
That was it. I just sang
a jingle.
I just made it up right there.
Which celebrity would you most want to be stuck in an elevator with?
Cameron Diaz. Carmen Electra. Who's the other one? The Bombshell. She did an album.
I don't know, but I think you're going to tell us.
She did an album with Pete Yorn. She was in that movie with Bill Murray.
Dating himself here.
She was the most beautiful woman in the world for a long time.
I don't know.
Blonde. Betty White. Yes, Betty White. I would like to be trapped.
Got a funny story. I was actually not trapped
elevator?
in an elevator, but I met Oprah in an elevator.
Oh, that's awesome.
It's coming out.
I get a
car? No, she was coming out of her optometrist.
Really?
Yeah, and I guess my friend and I did not notice her, and we were having a private conversation. And Oprah decides to interject in our conversation to make herself known. And of course, it's like, it's Oprah's voice. So you immediately know it's Oprah's voice. And you look up and you're like, my God, it's Oprah. And she just injected herself into the conversation, said something to the effect of like, aren't kids just crazy and say the darndest things? And it's like, I'm sorry. This is an AV conversation, but you could see your way out of here, please.
You got no interest in talking
It's funny. The two colossal human beings of security that were escorting her. It was just pretty funny. And she hopped in her black Escalade, and that was that.
Drove off down the road.
But yeah, that was my personal interaction with Oprah, folks.
That's incredible. That's a Chicago thing. That's what happens
she
when you
trolled
live in Chicago.
me and my friend's conversation in an elevator. Yeah, well, thanks for listening to the Zaner MarketCast today. If you need more because you just can't get enough of us, you can follow us on Facebook and Twitter and LinkedIn at Zaner Ag Hedge. Also, you can get our daily market commentary by signing up for the Ag Hedge hotline hosted by Ted Seifried. The price is free, and it gives you access to all of our daily market commentary. It gives you a chance to connect with us on a personal level. If you have any specific questions about markets, agricultural commodities as a whole, links for that are down in the description below. And be sure to like, comment, and follow the podcast to not miss a beat. And we'll be back with you all as price action develops.
I can't believe I can't remember that girl's name. Come on. What is it?
Kathy Ireland.
No.
Pamela Anderson.
She's a movie star. You guys know.
Oh, you don't say.
She was a movie star.
Goldie Hawn.
It's a young woman. She was in the movie with...
These were all young women at some time.
With Bill Murray and they go to Japan. They're in Japan. The Coppola, the young Coppola woman directed it. Sofia Coppola directed it. It was Bill Murray, Scarlett Johansson. Can't believe you guys couldn't help an old man with that. Scarlett Johansson. I'm stuck in an elevator with Scarlett Johansson. That wouldn't be terrible. Wouldn't be terrible at all.
Have a great weekend, folks.
See ya.